What's up, everyone? This is Warren Howe. Hope you're having a great day out there. Now, today we'll be talking about Lithium America Corporation, ticker symbol LAC, a Canadian company listed in New York Stock Exchange as well as Toronto Stock Exchange. And we're going to be talking about who are they, what do they do, what is the thesis and bullish thesis around them. Yep, what are the cycles, and obviously a little bit on valuations. Now, this could be a good starter to be building your own due diligence. Yep. But bear in mind, we have been spending a lot of hours on researching on this company. Yep. But before that, appreciate if you guys subscribe to our YouTube channel if you haven't. Right, smash that like button to increase the algos if you enjoyed this video. And let's begin. So, what is LAC? Who is LAC? LAC is basically a lithium mining company, right? Upstream. Yep. As we all know, upstream companies are the best to be taking advantage of, especially at these times where average selling prices are increasing, right? And operating expenses are actually stagnant or decreasing as they scale along the way. So that's the beauty of it. And again, the Russia v Ukraine has sparked up a lot of things: acceleration on inflation, acceleration on commodity prices spiking, lithium carbonate prices have been spiking all the way to 77,000 USD to date and more, which was in a month ago 50,000. Few months ago 40,000, 30,000. The prices have been insane. So the thesis is around momentum, obviously. The thesis is around taking advantage and capitalizing on this and working out logically the fundamentals of this company for the short run and the long run. Yep, so stay tuned. So bear in mind, these spot prices that we should be mindful of is basically lithium carbonate, 99.5% battery grade. That is the price that we want to have and is relevant to lithium ASPs. Yep, lithium revenues. Okay, so lithium basically have 3 sites, and bear in mind, this is actually a summary of all the hours spent on building a thesis on this company. So appreciate if you guys again smash that subscribe if you haven't liked the button and all that normal stuff. By the way, we have been our Discord group is actually free. Yep, click on the link below and to join. We've been building thesis on this company and all the other companies, 2 stocks a month. And we'll be just sharing and from scratch, right? And there'll be videos in our drive, and that is actually for paid members. But joining the Discord group for free, overall for chats, looking at the public portfolio is actually for free. So appreciate if you guys can actually, just join the link, right? It's free anyway. So back to Lithium America, they have 3 prominent sites. Now, what is the important things that we want to consider when we want to factor in and before investing in mining or commodity plays, right? Number one thing is that how many sites do they have and what is the overall capacity? Yeah, because when we talk about commodities, there's capacity, and we are very fortunate because the information presented is actually very easy to understand. All it takes is a lot of digging, right? Especially in their feasibility studies, which we'll be talking about later. So Cauchari Olaroz is in Argentina, and that is the site that is going to be realizing revenues. That means prepared to sell off all of their products by the second half of this year. So that's the exciting stuff, okay? And because they have been spending nearly 8 to 10 years or more since inception, right? So forming the company, inception, raising money. Recently, I think 3 years ago, they partnered with Ganfeng, which is actually a very important part of the puzzle, yep, because Ganfeng has experience. Ganfeng has been around the block for decades. They know the space, and they actually own 11% of LAC. So that is the good news, because when a new company embarks their journey onto a new venture, there's always uncertainty, right? Execution risk, whether or not they can perform, management risk, all that. But with Ganfeng on the helm, especially owning 11% of LAC, they would ensure expertise. They will provide experience. They will expertise. They will minimize learning curves, right? So that adds on to the bullish thesis. Now, when we look into Cauchari, this is actually the site closest to recognized revenues. That means that Pastos Grandes and Teca Pass in US is actually no doubt the biggest in terms of capacity, is actually only ready projected within the next 2 years. So short term, we'll be actually looking at half of this year, right? The capacity, the total capacity that they can generate. So let's look at Cauchari for a little bit. And Cauchari basically has a annual capacity of 40,000 tons per annum, right? Lithium carbonate. So if we have half the, because they initiate sales the second half of this year, that means it's, you know, divided by 2. But actually their net, what they projected to be net lithium carbonate TPA will be around 19,000, you know, and change. Yep. So, and another thing to consider in when we do our revenue projections is that 44.8% of this site actually is LAC owned. Yep. Ganfeng owns 46%, and they actually have a partnership with the Argentinian government body of 8.5%. Yep. So this is actually the things to take note, because when we do revenue projections, we need to, you know, split it with LAC, obviously. So what I want to say is that the thesis is on high ASPs as they are increasing. Yep. Similar operating expenses at 3,006 per ton cash cost. We can actually take first year to be 4,002, and just, you know, as they scale along the way, it'll be normalized at 3,006. Now that's the beauty of commodity companies, as we mentioned before. So expanding margins, right? So that's the thesis, number one. Number two is that they will actually start construction the end of this year on stage 2 of this site. Yep. So they're actually expanding capacity, which has a total of 60,000. Stage 2 is actually 20,000. Current annual capacity is at 40,000. Yep. So this is the beauty. Now, if we take LAC's corporate presentation, and even if you look at, you know, lithium carbonate 99.5% battery grade spot prices right now, I check it out from my Bloomberg terminal, they're actually at 77,000 based on the end of February. Yep, 77,000. Now, lithium carbonate prices have been spiking up again, hence LAC stock prices actually spiking up with it. But what I'm trying to say is, if we take net, and if we just normalize 40,000 or 50,000 average selling price, minus the 4,000 operating costs that they have to spend, we are looking at huge margins. Yep. So if we analyze, let's say 45,000 minus 4,002, we are looking at $40,800 per ton net. If we times that by this year, which is half of what they can get, 19,000 net, 19,000 TPA capacity, we are looking at $775 million revenue that will be recognized for LAC. Hence, the stock price actually, you know, reflected. Yeah. So LAC has a market cap of just $4 billion USD currently. This is operating income. If we just give them taxes, we are looking at 580, possible 400 to 580 million net income for the end of this year. Yep. Oh, bear in mind, we also have to take into consideration LAC's stake, which is actually 0.44%. We are looking at 250. Sorry, so I did not take that into consideration. We are actually looking at 255 net income. So if we were to actually just take a simple PE ratio, we are looking at 17 PE on a average 45,000 per ton, because commodity prices can go up, spiking up, can be spiking down on sentiment. If we were to actually just take an average of 45,000, it would be 17 PE. Now that's the valuation for the short term. Obviously, the long run, there'll be more capacity. Yeah, but all in all, the 3 sites that they have, Cauchari, the others is Pastos Grandes, which is also in Argentina. They have a total of 23,000 TPA. The bigger Hail Mary growth story for Lithium America is actually Thacker Pass, where Thacker Pass has 60,000 TPA on just the first phase, and they can expand obviously more because it's a big site, right? So all in all, this is the thesis around it. That's number one. Number two is that based on their projections, our projections, what we did was not far off. Their cash flow and feasibility reports actually shows that they are actually assuming revenues of 156. Now this was actually gotten from their latest earnings call presentation. Yep. So in this report, they expect year one revenue, which I'm very surprised why. The prices have been actually spiking up since when they did this report. They are just actually assuming lithium carbonate prices to be at 12,000 per ton. That is sandbagging and lowballing at another level, right? Because lithium carbonate prices are actually more than that right now. It's actually more than 3 times more. Yep. Now they projected revenues to be 156 million at 12,000. If we actually just round that up, 156,933 divided by 12,000, we're actually just looking at 13,000 net. Now our projections just now was based on 19,000. Let's 13,000 capacity. Yep. So again, what I did was their projected revenues for this year one, which is half, will be 156 million based on 12,000 per ton. That means they're assuming capacity will be 13,000, and that is a conservative level. Bear in mind, this is the low ball level. So we are working a conservative or even a bear case scenario. So bear case scenario at 13,000 TPA, tons per annum, we times by the normalized rate that we think would be, maybe it could be 40,000. Let's be more bearish and put 40,000. Below that is actually not really possible because prices have been 77,000, they have been 56,000, 77,000, and still going up. It might decline, but normalized rates is decent enough to put 35 to 40,000. So let's say 40,000. It would be, we are expecting first year revenues of 523 million. You times that by 44%, which is actually LAC stake. LAC stakes is actually 230. Now, again, if you times by, we didn't work out the operating expenses. Let's do that again. So 156,933 divided by 12,000. We're looking at 13,000 capacity. Now we took 40,000 annualized at a normal rate, cost per TPA, minus their operating costs for 4320. That means net of 35,680 will be the net selling price per ton. Yep. So you times by 13,000 just now, we are looking at 463 mil in revenues. You times LAC stake, which is 44%, you're looking at revenues of 204. Oh no, this is not revenues. These are operating income. Sorry, because we already minused off the costs, operating costs. So this is 204 million of operating income, and we just take, let's say 25% on interest and taxes to be at 25%. We are looking at net income of 153. Now in the short term, we are looking at a PE of probably 29. Yep, so we're looking at a forward PE of 29x, but the beauty comes into the years to come, right? Now, based on their projection timelines, their project timelines, it would actually take 2 years to complete production, to complete construction. Yep. So looking at USA Tech Pass and their status, they're actually on construction stage, and we can actually see this from here, right? This is the timeline. All key state environmental permits issued, and also looking at this stage, we can expect to see project details, geology, drilling, exploration, actually at this stage permitting. So if we just expand this, we expect to commence in 2022, which is this year, following the receipt. And based on my research on, looking at the history of the project timeline, it takes 2 years for construction. Assuming 3 years, Tech Pass will be ready. That means 60,000 annualized revenues, right? Recognized revenues of 60,000 TPA, which if we were to just normalize the rate in 3 years' time to be around 20,000 as commodity prices slow down, is potential 1.2B revenues times 20,000. 1.2B in revenues, yep, on just Tech Pass. So this is the growth story and longer term vision of LAC. But again, it's yet to be decided. This Russia v Ukraine war actually not only accelerates inflation, but tells people that, okay, especially America, that we should be self-reliant. Yeah, we should be self-sustaining, self-reliant. We don't want to be depending on, China anymore or any other country, self-reliant. And the good news is Tecapaz is 100% owned by LAC. Pastos Grandes, which is the smallest site in Argentina other than Cauchari, is also 100% owned by LAC. So that's the good news. Now, the story is from Ganfeng, they've actually been getting all the experience on how to sell, where to sell, the probability of selling, and, the experience overall. And it's still owned by Ganfeng. So that's the good news, right? We actually see that covered. And this is the growth story of, LAC. Now, the other thing to take note is that I did this thesis actually ever since on 23rd February. Yep, I posted in our Facademy page. So, cash flow projection feasibility study that they actually done up since 2020 was at 8,000 per ton. Right now, prices are actually close to 70K a ton. Yep. And this is very interesting because this is actually lowballing at another level. Now, this was the cash flow projection that we actually turned up. It says cost per ton at 4,002. Normalized at 3,003, and then after that 3,005 overall. So that's how they can actually scale, because operating cost is actually fixed. If ASPs increase, even if they take to 20,000, it will still be a profitable company, right? But not just as profitable as the huge spike that we see. So we will definitely see volatility in stock prices after this year or next year, but who knows. But this is actually what we actually gathered from the cash flow projections. Number two thing to take note is that projected capacity will be ramped up to be 19,000, which we discussed just now. Expected earnings will be this much after split with Ganfeng. Number four, annual capacity, and the downside is that valuations might be too inflated because it's just it's already a $4.5 billion company, but earning after split of 153 million in revenues this year only, right? So the risk is we might be buying at inflated prices, but again, the stock price is actually corresponding to how commodity prices move, especially lithium. So we just got to take note on that. But we have been taking action. We've been actually starting a position in LAC. And we're very happy to say that our members as well, they got 44% off LAC currently, which is really good news. So again, you want to join our Discord, it's for free. Just join the link down below, and that's that. So hopefully we have covered a few areas and the bullish thesis. Number one, what is the experience needed to actually launch their products and actually sell? They have a substantial 11% of Ganfeng owned, so this actually solves that problem in my opinion. Number two is how many mines do they have and what's the projected annual capacity. Now they have total annual capacity of TPA of 24,000 from Pastos Grandes, Tecapaz of 60,000, that's 84,000, and after stage 2 of Pastos of Cauchari, it adds up to 60,000. So we have a total of 24,000 from Pastos. We have Tecapaz of 60,000 and a total of 60,000 from Cauchari, which brings up to 144,000 tons per annum of lithium. Yep. So if we average that on a 25,000 normalized rate after Tecapaz is done, we are looking at $3.6 billion on average annual revenues that this company can potentially generate. So that's the bigger long-term game for lithium. Yep. So we talked about that. We talked about spiking prices, and let's talk about Ontrons a little bit. So this is actually a company that is very difficult for different miners to actually penetrate. Now their competitor is actually the bigger one, which is Albemarle. But why do I say that Ontrons coming in and barriers of entry is high? Because it takes nearly 10 years from inception after finding a site and exploring, mining, just doing the due diligence on whether or not that mine is capable. It's very long, yeah, from inception, and 2 years for construction. So from that stage to selling a product and recognizing revenue will take too long. It might not be sustainable for other Ontrons to come in. So it's not just a Tom, Dick, and Harry. Any Tom, Dick, and Harry can just come in and do business. So that's the good side of things. Yeah. So we talked about that. We talked about the demand. They're actually having a good product market fit because of EV companies overall, EV batteries overall, and it's a good fit for the future of solar panels. So yeah, this is it. Now we talked about valuation as well. So hopefully you guys enjoyed this video. Smash that like button if you haven't. Subscribe to our YouTube channel if you haven't. And I'll see you guys in the next one. Thank you.